Welcome back to Stock Sense. I'm Malik. If you were watching the screen on Wednesday thinking the market was weak, today is the wake-up call we were waiting for. It is Friday, December 26th, and the bulls have stormed back into the arena. Right now, looking at the live dashboard, the KSE-100 index has not just recovered, it has absolutely shattered resistance levels. We are currently trading at 17,265 points. That is a massive surge of over 1,435 points in a single session, pushing the index up by nearly 0.84%. The market opened with intent, breaking past the psychological barrier of 17,100 and climbing straight through 17,200. Volume is healthy at nearly 198 million shares, and the value traded is ticking over 14.5 billion rupees. The fear we saw on Wednesday? Gone. So what triggered this massive reversal? It wasn't random. If you look at the macro developments we were tracking this morning, the writing was on the wall. Three major catalysts are driving this sentiment today. The ADB deal. Pakistan and the Asian Development Bank have signed agreements worth $730 million. This isn't just cash. It's targeted at power transmission and reforming state-owned enterprises. The market loves structural reform. Interest rate expectations. The government successfully raised over 900 billion rupees in the latest T-bill auction, but crucially, they did it by cutting yields. This signals that borrowing costs are coming down, which is massive fuel for equities. Privatization progress. We have confirmation that Fuji Fertilizer Company, FFC, has joined the winning consortium for the PIA auction. This keeps the privatization momentum alive and credible. This brings me to the most interesting part of the analysis, the trap. On Wednesday, the index dipped to 170,800, and many retail investors panicked. But if you looked at the flow data we analyzed, the smart money was doing the exact opposite. While the market was red, mutual funds were net buyers of $1.6 million. Foreigners also bought $0.5 million. They were accumulating shares into the fear, positioning themselves exactly for the news cycle we are seeing play out today. The selling from insurance companies and banks was absorbed, and now those buyers are sitting on significant gains. Beyond the index, let's look at the specific corporate activity driving the tape today. Dolmen City REIT is in focus after announcing a 6.3% distribution. Investors chasing yields are likely active here before the book closure on December 30th. Keep an eye on liquidity in Askari Bank and Day One Automotive as their book closures for TFCs and debt instruments begin today. JS Investments is holding its AGM today, which could spur some volatility in the script. On the policy front, the approved tax exemptions for traders in Gilgit-Baltistan are boosting sentiment for regional commerce, which indirectly supports the logistics and trade sectors. Technically, this move is significant. By reclaiming 17,000, the KSE-100 has invalidated the short-term bearish signals we saw on the whole moving average. We are now back above the 10-day EMA and SMA. The strategy for the weekend. If we close today near these highs, around 17,200 or 17,230, it sets up a very bullish sentiment for Monday. The support has now moved up from 170,000 to 171,100, today's low. As long as we hold above that, the trend remains buy on dip. It's a green Friday, and the market is rewarding those who followed the flows, not the fear. Enjoy the weekend, study the charts, and I'll catch you on Monday for the pre-market brief. This is Malik signing off for Stock Sense. Invest wisely.